Some relief for indebted consumers as the Reserve Bank cut the repo rate by 25 basis points. The rate-cutting cycle will, however, likely be shallow as the risks to the inflation outlook are now assessed on the upside. The Reserve Bank expects inflation to remain contained in the bottom half of the target range through the first half of this year. It's, however, expected to go up to around 4.5% in the second half of the year.
The MPC decided to reduce the policy rate by 25 basis points with effect from the 31st of January 2025. 4 members preferred this action, while 2 supported an unchanged stance. The committee ultimately agreed that it was possible to reduce the degree of policy restrictiveness, making the stance somewhat more neutral. However, all members were concerned about the uncertain global outlook.
The Reserve Bank says while inflation remains contained, the future is uncertain.
However, the Reserve Bank is clearly very concerned about the inflation forecast risks and cautioned against just assuming that there will at every MPC meeting be further interest rate cuts. The message from the Reserve Bank is that further cuts will likely depend on how these inflation risks unfold. That said, the interest rate cuts that we've seen so far and the likely future monetary policy relief will provide some support for the economy in the year ahead, and we expect notably stronger growth this year.
The central bank notes a challenging global environment as well as administered prices here at home as problematic.
A lot of the global factors are very uncertain, especially since Trump has taken office. I mean, almost every morning one needs to look at what happened overnight in the US, or there may be some surprise announcements in terms of policy or tariffs. So yes, there's a lot of uncertainty.
Experts say consumers are, however, still facing tough times as the effects of the rate cut get cancelled out by other rising costs such as electricity and fuel.
You know, we've got to put it into the big picture and to say, okay, we're going to see a few $100 savings maybe on a bond or a vehicle. But looking at the current predictions, we're probably looking at a fuel price increase next week. So, you know, they're just cancelling each other out at this point.
This rate cut is, however, bad news for consumers with savings as it means the interest they receive on their deposits will be slightly less. Gloria Safakomosi, SABC News, Johannesburg.